Good morning. Good morning. Hope you're doing well wherever you are across the world. Ukraine continues to fight for our freedom here in Europe. And gold continues to scream amidst this geopolitical uncertainty. Going to cover a couple things today, a couple macro things, gold, and also I got a request to do a quick explainer on the power law again, so I'll do that. But starting, let's just go basic again. All right, here's the U.S. money supply. This isn't total money supply in the world, but this is U.S. All right. You can calculate the United States M3 money supply. Just need to put a little work in. It's nearly $37 trillion at the moment. All right. M1 is your demand deposits plus physical cash. M2 is retail type deposits, savings deposits, time deposits, retail money market funds. M3 is your more exotic money supply. Institutional, large time deposits, large money market funds, repurchase agreements, and Eurodollars. The one thing that I don't have, and it's very difficult to calculate actually worldwide, is the Eurodollar balance. So Eurodollars means offshore dollars. That means bank accounts that individuals, entities own outside the purview of the Federal Reserve, outside the United States. There's a lot of estimates on how big the Eurodollar market is. Could be anywhere from $1 trillion to $10 trillion to $50 trillion. Unfortunately, I don't have a handle on it at the moment. Something I'd like to get to, but at the moment I just don't have a handle on it. But typically, the Federal Reserve, they only show M2, and also they started recalculating M1 from COVID times. So there's a lot of craziness with the money supply, trying to get backwards compatible money supplies. But on a quarterly basis, you can do it. So this is through June 2025. Nearly $37 trillion. You can see here it really got extended before the GFC. Federal Reserve stopped publishing it right about here, February 2006. You can see how insane that is if the monetary authority of the largest currency in the world ceases to publish a money supply. It's not very helpful. But with the data on their website, you can still get to it. All right. So to try to understand if we're going through a period where there's a lot of money relative to something else, one way, not the only way, but one way is to compare it to the government debt, all right, the federal debt. So I'm going to put the federal debt up now. Pretty close. All right, just the money supply, federal debt on top. Almost 1-to-1. This is all of the Treasury bills, notes, and bonds ever issued. Oops. That's layered on top of the money supply. We're already over 37 trillion. This is only going through June. And unfortunately, this is, again, not such a forward-looking indicator. I just can't, I could estimate, I could just assume that it increases at some rate, right, to compare it with the federal debt today, which is over $37 trillion. But try to be safe and give accurate numbers, so I'm not going to do that. Anyway, let's do a ratio of this. All right, let's take the money supply, the United States' broadest money supply divided by federal debt. All right, so this really brings out the cycles, I think, of the economy in the last 80 years. 70 years, really. But gold standard ended here. basically what you saw here was more money relative to debt. All right. This is also the end of the Vietnam War right here. Then the money supply started falling a little bit relative to debt, then grew again. And this right here was the peak of the gold boom of the 80s. So interestingly, when money was at its highest and interest rates were also at their highest, this ratio topped out. Went down, down, down. Times were good here after the fall of communism. I'm afraid we're going back to that in certain parts of the world right now, but at least China never really left it, even though they had some capitalist tendencies. They still never really left it. By the way, privately owned startups and companies are at like an all-time low in China. You can see that. So this ratio bottoms out back to about 1x. All right, money to debt in the mid-90s. A lot of efficiency start here. The web starts here. And then we go back up again. Money extends itself over debt. We have some bailouts. We have the .com here. Then we extend again. So it's an interesting ratio of where money is higher than debt. You can actually point to some liquidity booms, like safe haven sort of booms. So gold here, even stocks here. It's not necessarily safe haven, but stock market topped here. Gold actually bottomed here, so it's kind of unrelated to gold at this point. But stocks topped here, and then there's a lot of debt that was created relative to money. So we just go down, 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 and actually, according to this chart, it is, I believe, an all-time low. Yeah. So at least in the last 75 years or so, 70 years, all-time low of a little bit under 1x money to debt. Okay, so now there's more debt to money. Starting to go up a little bit. So let's look at gold now just to see relatively. Gold is super hot, right? This is a really long-term trend of gold. Not nearly as predictable as Bitcoin's power curve, which I'll show here in a second. Good morning, Satoto. Good morning, Gio. You're still on Peter Dunworth, aren't you? He must be a good salesman. Yeah, I'll talk about that. Since I'm talking about debt, I'll just show you the picture. But just really quick on this, as far as money versus debt. So the large M3 money supply here relative to debt, small, large, small again. Gold topped here. All right, so here's that 1980. Here's where, if you go back to this chart, it was here. January of 1980, very briefly. And into 81, but the highest, I believe, was January 1980. I don't think I'll catch it on this chart. January 1980. It hit 850 bucks for 2 seconds on the COMEX. All right, then fell into a 20-year bear. I happened to just luckily start investing in gold here. Complete luck. Had no idea what I was doing. Big bull, then sideways gold, then now we're up gold. Okay, so over a long, long, long timeline, the slope of this trend is actually like lower than you might think. All right, some people say gold does 7-8%. That's only if you started investing in gold right here at 35, 42 bucks an ounce. But if you go on the trend line, it's about 5.5. Let me give you the exact. Sorry. I'm going to say 5.5, but I don't have exactly pulled up, unfortunately. Too many numbers. Too many numbers. It's less than that. It's 5.1 even. Is that right? Let me double check that because that might have a rounding actually. Checking. Yeah, 5.2. 5.2. Slope of this black line is 5.2% per year, and this is a constant exponential line. 5.2% per year. It's highly unlikely to me that gold will change this trend. So where are we right now at today's price? Screaming gold in October, $4,032 an ounce. This is today's price. We're in the 97th and a half percentile. We broke through it. It seems rare. Doesn't mean it can't go higher. Doesn't mean we can't be like this and pull it up. But we're at historically high levels. Right? Well off the lows. And though Peter Schiff is definitely loving this ride, this stuff is extremely strong. If I showed you an exponential trend for debt itself, for the S&P 500, it's very hard to really break out of what you would call the long-term trend here. You could say gold is trying to do it. I have no problem with gold, but I would say it's really a time to be careful with gold. We're above the 9, as I say, with the exponential. I should get the 10 band, sort of every 10th percentile. But here we're in super rich territory. Again, doesn't mean we can't go up for, from 2008 February to 2011, we went up $1,000. We really pulled it up. We could totally do this again, but it's not going, in my opinion, it's not going to 30,000 like some people like to think. That would just completely change the long-term supply-demand dynamics of gold. Could happen, but it seems unlikely to me. Yeah, it's all everybody's selling something, right? Just chilling. So let me pull up the. If I'm going to respond, okay. So let's look at treasuries now. Okay, so treasuries are here, all right? So it's literally the federal debt. Is you sum that up, you're going to get the treasury value. So I'll try to respond to this question that you have. I'm not going to say I know exactly what he said, obviously, because I don't watch him. All right, so I've shown you this. I've shown you guys this a lot. All right, this is a good one. The United States once had no debt. We'll be here. Andrew Jackson paid off the debt. Lasted a glorious year. He did not renew the charter of the First National Bank. This was one of his last main achievements, if I recall correctly. I haven't read about him in a while, but it's funny that, when he got out of office again, they just start up another bank for another 20-year charter. First Bank of the U.S., 20-year charter. Second Bank of the U.S., 20-year charter. Those were, central banks, Hamiltonian banks. After the Civil War, big rise in debt. You don't need debt, though, to, this was a huge boom time for the United States. We didn't really have a growth in debt, so that's also kind of a myth. You don't, today, with our fiat world, you do kind of need it to take on big projects, but history shows you don't have to do that. Okay, so here, to go back to this point, is that the name of like a newsletter that he's just put out, or is it a book, or is it a documentary? Modern economies run on collateralized debt, bonds backed by overvalued assets, not sustainable growth. Bitcoin flips this. It's bare wealth free from counterparty risk. Yeah. I agree with all this. 100%. If we go back in time, again, there was no central bank in any of this period. Well, there were central bank. The central bank was here. I don't have the bank balance sheet of the first bank or the second bank, but all of this was a gold standard. It's actually more of it was bimetallic standard, but so gold was fixed to the dollar and silver, but silver was preferred de facto and de jure, I think, even because the coins were minted in silver until here. So this Coinage Act of 1873, this went to a more de jure gold standard. So in this example, gold was the bearer wealth, and gold would keep prices in check, would keep the economy in check. So I agree with all that history, and that's true. Also, wars, and you can see it here, right? And there are other wars here, like the War of 1812. During wars, relatively speaking, we're always going up in debt. Civil War was a big one. World War I, World War II, we go up in debt. Okay, so it is what it is. The U.S., from here being the hegemon of the world's biggest military, was able to throw its weight around as far as, people needing to use the dollar, and the U.S. benefiting a lot from that. In my opinion, that was actually discovered really here. So now I'll show you the central bank holdings. So going back to this point, well, they're going to come. But watch out for them because, again, this is going to be weird. Bitcoin moves in power, not exponential. So back to this collateral idea. In my opinion, especially looking at this chart, okay, so this is now, we talk about the collateral of the dollar. What does the dollar hold? They hold Treasury bonds. This is what you see here in dark green, and I know it's hard. I could zoom it at any time, right? It's always a minimum. I'll show you the percentage in a little bit. But the Federal Reserve's balance sheet is the dark green. So this is what people talk about when they talk about the collateral of the dollar. What is behind the dollar? Well, it's Treasury bonds. This is literally, this whale here is what the Fed holds of U.S. debt. And we can run this as a percentage. I've shown this a lot. All right, the Fed was not involved in Treasury bonds at all during the beginning, okay? They're only, the Fed was holding 1% less than of U.S. debt. All right. Even with the Great Depression, they did not have a lot. They started to take more on during the Great Depression, as you can see here. And then when the U.S. entered World War II as well. But those that know their monetary history, a lot of stuff changed here. Of course, gold was confiscated. The Federal Reserve Act to take the gold, except dentists got away with keeping some gold, which was good for them. And we just went on to more dollar standard. But in my opinion, I think where they really figured out the alchemy was right here. Was right here. Because the U.S. is like, at the start of World War II, the U.S. had nothing internationally, like zero. There was very, very little, like what happened in the Philippines or just a few foreign conquests, and of course World War One. But the U.S. was completely transformed militarily during World War Two. But they were still constrained by gold, right? So the Vietnam War, in particular, as most people know, started to drain uh, the U.S.'s current account balance, and France and everybody started to say, we don't actually trust your deficit spending. We want the gold back. So they stopped gold. But I think, in my opinion, this was a concern, right? So you see here, the Federal Reserve is buying more and more debt as the Federal Reserve is buying more and more debt here as the Vietnam War is raging. Right? It goes from a high of 10% of the balance sheet. That is 10% of the U.S. debt was owned by the Fed, all the way up to 18 actually. And then the war ended. But now look at this little thing. This is the actual total debt here. The reason this percentage goes down, the Federal Reserve was still kind of buying debt at the same clip, but the U.S. realized they could even issue more and people would still buy it. And of course, the price still went down and there was inflation. This was a rough time. I'm not saying it was like so easy, but interest rates topped here, which means debt is at its all-time low value here. When it's high interest rates, it's low value. Low interest rates, it's high value. Debt, the price is high. But the writing is on the wall basically from here. So this is, in my opinion, when they really figured out the alchemy, that they could just issue more bonds and people would buy them generally. Federal Reserve could buy a portion, and the U.S. issues more and more debt relative to the past until the GFC. Then we have QE 1, 2, 3, COVID. Now, I think it's going to happen. I do. But what is going to be interesting, and not a lot of people are talking about this, is I sound like Trump. You guys hear me say it all the time. Bitcoin is a power asset. So Bitcoin doesn't move like gold does. Gold moves in a straight line. Bitcoin, as you guys know, moves in this beautiful power curve. I meant to make projections. I forgot to do it. But what I want to show probably is if I think it's a big possibility, actually, especially because everybody thinks in terms of debt and compound growth, that maybe somewhere here in 5 years, in 10 years, this nice sustainable curve, because of all the pressure exerted on Bitcoin from all different big state actors, will start to straighten out. I need to fully flesh out this idea for you, but then if it does that, then it's able to handle compound annual growth contracts, i.e. Bitcoin bond contracts. But I do not see, again, I'll say it again, I do not see Bitcoin bonds working for the regular economy with limited Satoshis on a Satoshi standard. There's just not enough Satoshis to go around. So we'll see. I do appreciate the headlines. None of these authors are thinking at all about what I just told you. They have no idea what the power curve is. They have no idea that Bitcoin moves in a different way than gold, than stocks, than bonds. Let me pull up TradingView. Show you. There's two problems with the Bitcoin bond. All right. So let's just look, let alone the fact that interest rates are rising. So we talk about this a lot, right? Let's look at the 10-year. Yeah, thanks. I will. But here's the 10-year. All right, so here's the price. Par is 100. So when rates are here, all right, its bonds are at all-time low valuations. When they're here, they're at all-time high valuations. We're getting to lower now. But regardless of where bonds are, generally the yield to maturity, which is what this chart is the overall percentage you owe when you take out a debt at any given time. Okay. And if you take out debt at any point here and then rates go lower, that's better for you as a borrower because you can refinance, you can take on more debt. It's way better. When rates go up, it's extremely painful. So we had this really bizarre run up like this from World War II to here. And then we went down for literally a 40-year bull in bonds. Now this is changing. But regardless, say you take, and I haven't read this article, by the way, Gio, so tell me if they're saying something different or whatever. But say you take a Bitcoin bond, you borrow and your bond is in Bitcoin. There's two problems there. First, if it's a 10-year loan, even if it's, very low interest rate, you have the exchange rate risk of paying whatever your par is. Say it's a 0.1 BTC or 1 BTC in the loan. Paying back 1 BTC over a 10-year period is a huge risk. Right? It is much less of a risk if you do it in a dollar-denominated bond with Bitcoin as collateral. Then it's okay. And of course, everybody's doing that now, right? But an actual Bitcoin bond, and tell me, Gio, by the way, if they're saying anything, but an actual Bitcoin bond denominated in Bitcoin would be disastrous for a borrower. If you borrow at let's just say you borrow 1 Bitcoin here, right? And then in 2035, you got to pay that bond back. Your Bitcoin just went up 15x in value in dollar terms. Now, if you just use it as collateral to take a loan, then of course everybody's doing that. That's fine, whatever. A lot of people having a field day with those fees. But did they say, Gio, did they say in this article anything about borrowing in actual Satoshis? Or is it just pledging your Bitcoin, borrowing against it in a dollar-based bond? Because if it's doing that, then then it's more or less okay. And I think, like I've told you guys before, like I would not loan Bitcoin really under any circumstance. And if you look at the staking yields on these exchanges, they're like 0.1%. Do they even clear 1%? Probably not, just to loan the Bitcoin. That seems like a huge risk to only get 1% in Bitcoin terms while you lend out your precious BTC. Okay, I'll take a look. It is a pristine collateral. I 100% agree with Dunworth there. Super pristine collateral. Going back to this M3 versus debt. All right, again, this is why hyper-Bitcoinization is not coming anytime soon, because they still have a huge, huge saturation in the market. This is just a question of pendulum swinging, and this is a long, long-term thing, right? I mean, you can go a lifetime of investing from here, from the bottom to the top to the bottom. But it does seem that where we are now is an all-time low. Doesn't mean we couldn't have another leg down here. But what that means is, if this goes back, if the money supply goes back to 1.75x debt, or 2 or 2.2, usually your hard assets or your stocks can explode during this period. So that's a good thing. Bullish, I guess. Trying to predict out the trend of the money supply is harder, all right? Because as you see here, remember, this is part of this metric, right? The money supply, really from here, from the GFC, has been pretty, it seems like it's been ramping up, and it has from COVID, but it's been still, this is log scale. So we're still well under the trend of pre-GFC. This is, of course, the all-time trend is here. %, R squared really explains the trend, but it seems like we're very far from massive amounts of money printing. But if we, you never know. It's harder to predict this, I'd say. It's harder to predict that we stay in these levels of money printing, like really tight bands. My point is, I'm trying to see if there's anything that can show us that the money supply is really going to fly in the short term. It's hard to know, but this, if pendulums swing, it does seem like we're in the bottom, and it does seem like probably money relative to debt will be increasing over the next few years. Okay, having said all that, I want to say this one more time because I had a good question. This one was on Twitter from Darrow Olikos. He says, I really need a 10-minute video of you explaining power curve for the wife. So happy to provide that for you, Darrow. Again, I just talked about that in the intro here, but all assets, if you marked them according to a trend line, stocks, bonds, gold, silver, they all move like this. It's a straight line on log scale, exponential. It's the same thing as compound growth. It's the same thing as geometric growth. It's constant growth. And so this trend line, if you grow it 1 year at 5.2%, 5.2%, 5.2%, 5.2%, all right? This can tell you a few things. It can tell you doubling time, but it also just gives you a benchmark of where your purchasing power usually should be. People use CPI. Those numbers are like super doctored, so I don't trust that. I'd rather measure the stock market, measure the gold market. So the point is, over the long term, gold, even though it's screaming right now, and we're in very, very rich territory, over the long term, gold does 5.2% per year. That's actually about half of what the stock market does. The stock market over the last 15 years has done 12, 13% per year. Add dividends, that's like 15%. So it's actually even 3 times the long-term gold trend. So that's kind of how the whole financial world thinks. But the wild thing about Bitcoin is we have this power curve. And the power curve is not a straight line on log scale. So as we go up in log space, all right, this is 100 times higher each level, base of 100. We don't get this straight line. And in my opinion, not enough people are thinking about this or understanding what it could mean. Essentially, at the end of the day, it means that it is more scalable. Networks grow this way. It's more sustainable. And unlike this chart, where you can just have a constant growth, you could figure out doubling time. For example, this is less than 10% growth, but if it was 10% growth, it would double every 7 years. With Bitcoin, it doesn't work like that. With Bitcoin, it's proportional is the word, right? And you have to calculate it, but the rate of growth for the Bitcoin power curve changes. It decreases across time, but it also suggests it's more sustainable. So right now it's 42% per year. It still is massive. It's way more than any financial instrument. But the number is about 12.7% for every increase in time or life of the network. So when Bitcoin was really young here, it doubles, by the way. I don't know if I said that. But 12.7% increase in time, the trend will double. That's what it will do. It will double. So here, when Bitcoin was only a year and a half old, or let's say even when it was like 600 days old, it would take only 70 days for the trend to double. All right. Here, we're about 6,000 days into the life of Bitcoin. So a 12.7% increase is now over 700 days to double, or i.e. 2 years. 2 years to double. So that's exactly where we are right now. The growth of this curve is 2 years to double. And I can just show you, all right, roughly. Let's just look at the end of the year. All right, so end of 2025, we got 125K. Let's go now to the end of 2027. And there you go, and a little bit more. All right, so start of 2028, you double the curve. What I just showed you is a 12.7% increase in the life of Bitcoin. Okay, but as it goes, that percentage, or not the percentage, but the doubling time increases. So that's really the point of a power curve, is that it's a sustainable sort of network type growth, which in my opinion is really, really interesting because no other asset grows like that. Even as gold, the solid, amazing, wonderful, beautiful international asset that it was, accepted everywhere, right, as money, a really volatile 60 years here. Even though we can smooth it out, right? You can be way over the trend and be way under the trend. And now we're pretty far over it again. Of course, you can have these extremes in Bitcoin too. But this straight line on log scale suggests instability. Exponential trend lines suggest instability. They're very volatile. They grow very consistently, but often people rely on that consistency, and it's not what you thought it would be. So, saying this again for new viewers that are checking in here, it's a very unique asset in that sense. Also get some questions on YouTube, when we go out to 2050, what's the power curve? 23.5 million. 23.5 million. Which is way more sustainable than if Bitcoin was growing exponential. All right, so I'll pull this out again. I always show it, but I'll pull it out. One second. Good morning, Casa. Totally agree with you. You get huge premiums over spot, right, with this price. No matter where you are in the world, like getting a 3% premium on your buy or sell that is a cost to you both times as the buyer or the seller is good. Getting a 3% premium. If you buy at spot at a jeweler on the street, or a pawn shop, it'd be 7%, 10%. That's $400 if you on an ounce. Now, all right, I'm being pretty uncharitable there. Maybe be a little bit less. 7%, 6% spot. It's a lot. It's a cost every time. Every time you do a transaction, it's a big cost. So here we go back to our different models of Bitcoin. I'll take off these stock to flows. Remember, if Bitcoin was power, it would grow on this curve. Sorry, if it was exponential. If Bitcoin was exponential, it would grow on this curve. And you can just use your eyes with the eye test to see that this curve is way better, infinitely better. R squared is better, but just the eye test looks better. So I've heard a lot of people like Plan B and others who have been wrong before say that we're still on an exponential growth for Bitcoin. We're just not. And if we go out to 2050 here, again, here's our 23.5 million on the power curve price in 2050. But an exponential curve of Bitcoin's growth will be 350 trillion. It would be amazing. This is your Dunworth projections there, Geo, but it's not going to happen. It's going to be really interesting tension with bonds in the future, Bitcoin bonds, because people are really going to have to consider investment value. Like, would you rather lend someone dollars, hold a dollar-denominated instrument, while someone borrows in dollars but pledges Bitcoin as collateral? What percentage would you expect? then the second issue, as I said, is everybody's expecting Bitcoin, like Bitcoin-based bonds, Bitcoin-based world. You can't run the math on a bond when your asset grows like this. And how you would think of that in Bitcoin terms is if you lend, you know, whatever it is, 1,000 sats, 10,000 sats, 100,000 sats, million sats, 100 million sats of Bitcoin. You're going to have ever and ever more limited Satoshis to pay back that loan. And that could be very hard for a borrower of that loan in Bitcoin terms. So we'll see. Yeah, there's a really good chart actually from my friend Money or Debt, an MIT guy. Let's see if I can find his quote about Saylor. Twitter has so terrible search. See if I can find it. Let me see. I can't find it, but this is a great follow, Money or Debt. And he's an MIT grad. And he's talked about how Saylor, talking about this, all your models will be destroyed. He should just get with the program and embrace the power curve because it's mathematically wonderful. Makes all the math sense in the world. And Saylor's models, by the way, it's funny that Saylor said all your models will be destroyed, and then he created a model. He had a bull case, a bear case, and a regular case. It was a sort of consultant, weird, like declining exponential. They tried to kind of be a power curve without actually saying it was a power curve. It's very strange. I don't know. Maybe he just doesn't want to bring too much attention to the idea. Maybe he hasn't thought about it a lot. Congratulations if you're watching this, because I'm telling you, this is another reason why I'm not so convinced that we're not going to have a blow off top this quarter. Like, you're in the 1%, 0.1% if you're even thinking that Bitcoin is moving in a power curve. No one has any idea about this. Good morning, Nancy. Bullish, super bullish. Except for the Bitcoin Treasury companies that keep going bankrupt or whatever. I'm sure you guys saw the news about Bailey and Nakamoto. None of that is a surprise to me. I mean, you'd have to be really, really careful with taking leverage, especially short-term leverage, to buy Bitcoin. Saylor did that back in the day. Had short-term windows, 3 years, 4 years on the debt. And, if you're holding that through a bull then into a bear, it can become very, very dicey. Even though his closeout was always really, really low, right? Like even 3,000 back when it was 19,000 or whatever. Not everybody's going to be so smart. Not everybody's going to be so prudent. So I have a little bit of concern there, but that's mostly going to be in the bear. In the short term, yeah, I think everybody's going to do it. The best thing to do is borrow against Bitcoin at a good rate if you can find it, and if you have cash flowing assets in your business like Saylor had with MicroStrategy, all the better. He's going to remain, though, an interesting, just an interesting character in the space. He has such domination of. Whoop! Here's another. Look at this advertisement for another one. This is a Brazilian company, Orange. I know this because my buddy Fernando is involved. So here's another Bitcoin Treasury company, now listed on Brazil's B3 stock exchange. I don't know if they're actually even here. It'd be funny if they were or not. How many do they have? Because I think they have. Yep, here they are. Brazilian moving up. Oops, sorry, I'm going to take your thing off. There's Orange. So the Brazilians are in the game. Also here. Add them back here. Marathon, Meta Planet. I think there's going to be a lot of interest during the bull. During the bear is when the masks come off and everybody sees how dumb some companies were to make some of their agreements, some of their, interest payments, and they just don't have the money to pay the interest, and then you go bankrupt. Especially if you're just holding Bitcoin and you don't have any other business. So I'm very skeptical. Like all of this seems very frothy to me, like the old ICO days. Yes, it's fantastic that they're holding Bitcoin. Fantastic. Saylor, of course, is in a much better position with all of his preferred instruments now. So he doesn't have, like I mentioned earlier, he doesn't have those convert and those maturity dates, basically. He has rollover maturity, which is great. If people are going to give him money just in exchange for an interest rate or, basically an interest rate, and there's no real expiration on that interest rate, it's actually not a bad deal. If he's sure that he has enough of the cash buffer and with the other business that they have as well to maybe pay some interest, which I guess is not really that much at this point. This is such a huge dollar value, right? Huge control of the market. Yep. Yeah, this will work fine. I mean, that's happening right now, right? Borrowing in fiat, your money goes up. You can pay the interest rate in fiat. You just have the collateral. That's totally fine. But, let's not forget about what's supposed to happen here. We're supposed to be on a Bitcoin standard at some point, right? That's what they tell us. By the way, I think that could happen. I'm not saying that Bitcoin just stays an asset that's denominated in fiat. Yeah. No, I mean, it's amazing what he did. The guy, you just listen to him talk about the way he speaks about instruments. You know, he's obviously, you can tell he's a wizard he's got a very good memory. You know, he can just throw out all these little different interest rates that his covenants, uh, you know, his loan agreements, what they were actually inked in. So he's done wonderful. But my question for everybody else is, okay, you might want to hold strike or these different strategy instruments, collective yield, lend, let Saylor get more cheap Bitcoin. You might want to do that, especially if you're a big company or whatever your requirement is. But are you going to even do that? Okay, maybe you might even do it for Marathon. Maybe for Meta. Well, no, I wouldn't even say Meta, frankly. You can do it for Meta Planet in Japan, based in yen. Are you going to do it down here even for Riot? Tesla's is kind of a weird one here. At what point do all of these companies just hold some sort of a junk debt that could really be wiped out during a down market? Everybody's a genius in a bull. It doesn't exactly, though. Have you seen it? The guys did. I think Giovanni even did an analysis. Twitter's search is just atrocious. Does anybody know how to get around this? I guess I could just search on Google. Here we go. We talked about this. Cena's a good guy here. Really good guy. Has a good newsletter if you want to follow it. Model Wars. Oh, you're right, Casa. There you go. There you go. Follows it pretty closely, but whatever he did, he still wanted it to be different. Like you do this stair step, which is just a declining exponential. This is like every year he's just declining the exponential. Kind of similar to a power, but you don't get this beautiful smooth line. It's kind of a weird model. But does anyone not think that's hilarious? Like he spent 2 years saying all your models will be destroyed, then he put out a model. And Giovanni's right, by the way. You know, it's more what you see with Bitcoin. Here's the power law, annual return rate. Here's the other models. Okay. Um, and by the way, notice how they see. This is interesting too. So his consultant, whoever he hired to do this little stair step down, at some point they're like, "This is kind of weird that it keeps decreasing. Let's flatten it out." All right. So they flatten it out on the bull case at like 25%. So somehow here we're just going to keep it going straight. This is like something like power, his model, and then turning into exponential. If it's a straight line, it's exponential. So I think I find that also interesting with his model because people really have a difficult time understanding what a power law means, what it does. And indeed, we have no examples in finance of something that just keeps decreasing. Uh, so it's strange. It's very slow decrease. You know, you don't get to 10% until the year 2070, but it's going to decrease. Yeah. You got to tell your investors something at some point. You got to put some projections, some ideas. So that Cena said it exactly. Power law uses a power function, but Saylor uses an exponential function with annual corrections, which is true. Just straight line year projections that go down, and then at some point, like, well, we can't keep going down. Let's go across. Did you guys see the meme? How, Trump's gonna confiscate this Bitcoin. It's gonna be called MS Trump, MST Rump. Who knows? It's a wild thing that he's done, and someone had to do it. I'm happy for him. I'm happy for strategy investors. Yep, people have been doing this. Sminston as well. You can make the case that all Bitcoin companies will start to move that way. But again, people aren't thinking what that actually means. That's why I keep repeating myself. If your stock starts to move like this, you just cannot take on exponential amounts of debt. It's just the nature of the function. It's like if you look at population growth across the world, it actually runs exponential, right? So it increases or decreases. We're actually been decreasing for the last 50 years or whatever. But it's still a straight line across the chart. I mean, the percentage. So it used to be like 2% or higher industrial revolution times. Now it's down to like 0.8%, but it's about like 1% across the chart. But if you look at big cities, so you go from the global scale down to the big city scale, that looks like a nice, beautiful power curve. I'm looking now at the percentage growth. So the percentage growth declines just like Bitcoin. I'll show you here again. So it's not like we don't have things in nature that do what a power law does. But the weird thing is we have nothing in finance that does what the power law does. Nothing. Not one asset. Although I've heard that Facebook might kind of do it, which I have not verified myself yet, which is interesting. Makes sense, but why are you so slow? So slow. All right. So this will show you the whole thing, like for the next 150 years. All right. So again, Saylor presumes that Bitcoin is going to somehow turn into an exponential asset. And by the way, it might, but I think it's actually a worse thing. But this is actually what's happening. So this is the annual. It's crazy, but if you do it on a model, what's the slope of this trend? So we used to be in thousands of percent a year, right? Then we went to hundreds in 2012 already. And now, as I told you, we're doubling every 4 years, 42% per year. So let's take this thing out like to 2050. All right. We're going to be at 23 million. And still the growth is pretty high. Like 15% is a good stock market return today with dividends. And in dollar terms, like it's always going to look great. Like look at the, you know, I'm going to be, you know, in the 2080s, I'm going to be 100. I'm going to be happy with $775 million Bitcoin. But the interesting financial thing is this declining growth. Nobody really knows how to think about this, I think. All right, so all the way out to 2167. All right, 21 million is going to happen right here. So we'll be down to a growth of the power curve in dollar terms of 4.5%. And no, I'm not saying that the dollar is still the hegemon currency here. I'm just saying this is how the math looks. Everybody's expecting that we're going to get on a SAT standard. That's the thing that I don't think people are actually thinking about is how do you pay Satoshi denominated interest with a limited amount of Satoshis? Yeah, totally possible. Totally possible. Yep. That's good advice. But you guys tell me. I mean, say we get to here, right? I've talked about this a lot, right? I think we're going to catch gold somewhere here. I think we're going to catch fiat money here, as far as big as the monetary base, right? $5 million Bitcoin. Do you think we'll still have fiat just hanging around and everything's going to be in fiat? And if you take a fiat loan, it's still in, fiat. Obviously, you just have Bitcoin as collateral. Or do you think we're going to get on some SAT standard? That's the debate. Even the amount of gold out of the ground always increases. Let me show you. Let me show you. I got to refactor this code. It's running so slow when I have a few charts open. I do not get it. Possible. But if fiat's going to live forever, do they control Bitcoin like they controlled gold? Or do we live in some nebulous sort of halfway house where if you want to go in for the fiat abuse, you go in with your fiat cash. If you want to go out to the sunshine, you go out. I don't know. What happens when all the global south uses Bitcoin instead of their own shit coins? I don't know. But back to here, if I could pull up the damn chart, 1.8% per year, gold comes out of the ground. So gold was always increasing. People would say there's not enough gold. There was always enough gold, even though there's not a lot of gold. But Satoshis actually don't increase. It's very unique. They really don't increase. Yeah. And that's a answer to my query, to my question. If if compound growth doesn't work, right? If exponential growth doesn't work under a Bitcoin standard, then there's just not going to be that much lending. Maybe some short-term stuff, maybe simple interest, but I would certainly agree with that. Although I do think, you know, equity arrangements like en masse is sort of challenging. I don't know. I guess you just invest in Bitcoin companies and you have to do your own diligence, which is good. It's free market stuff, right? Um, the interest rate is nice actually because it gives a signal across the market how much generally the future costs. But then, like I said, you also have state control there, which is not nice, and they've been doing that for a long time. So, a lot of factors. A lot of factors. I'm gonna have to stop this damn thing and restart it. Okay, 1 second. So, Geo, finally to your comment. You know, it's the actual compound growth of gold. Very consistent, around 1.8, 1.7% a year. Trend line is literally 100% R squared. Right, we have 7 billion ounces of gold mined all time. And it's 1.8% per year. So, and by the way, I do think that's a correlation, right? Because the fact that Bitcoin is limited, weirdly, you have this sustainable curve. Now, this is kind of weird. Some people might think that it should be the other way, right? Because it's so limited that eventually it's that infinity over 21 million meme. But it's actually not. It's completely the opposite of what you might expect. It's a slower rate of dollar growth. That's the model. That's the math. I'm not a MIT grad, by the way, so don't ask me to explain that discrepancy. But that's a conflict of what of what you might think. You might think that as we get closer to 21 million, right, in the future, this should just start to move up into some singularity on the top of the curve. But it moves the other way. Did he? Saylor called Saifedean a communist. Saifedean is a purist, that's for sure. Yeah. No, I like all these ideas. I have no idea myself. I mean, I have an idea of a concept, but I'm not ideological about any of them of what could for sure happen. Other than I'm pretty solid that this is math that's going to hold for a while. Is this now to me? Oh no, this is Safety. War on the system. Did he say that? That's entertainment. It is entertainment value. I got it. When did this exchange happen? Was this a Twitter exchange? This is why I'm off Twitter a lot more now. Good morning, Rich. Good afternoon. I've been streaming an hour and 15. The good old economics. We started out with money supply versus debt. We're very low right now. Low money to debt, which, again, pendulum swing. It's a long term trend, but I think we could have a lot more money in the future printed. Hola. There's the 21 million over 0 equals undefined. I like that. Safedine is a purist. If it was on the podcast, I'm sure it stayed more civil. It was on Twitter. I'm sure it could have gotten a bit spicy. We're discussing this. Does anybody know when it happened? Can someone send me a? I guess I should just stop being lazy and search it. AI mode. Gemini says he never overtly, publicly called him a communist. He's been accused of being a covert communist. Is this a tweet thread, or is it from the podcast? I love it. That's what I like to hear, man. Squiggly lines on the chart with very bullish. All you really need to know is its number go up technology, right? Everybody's got their grift. Going back to the other topic, but I'm glad that that you guys joined me for this, especially during even relaxing time. So thank you. When did he say this, Gio? Was this as Ansi said? Was this on the podcast when he interviewed Saylor, or was it over Twitter? Not even searching Twitter. It's such an abysmal search function. I'll say this, not being a purist. There was a certain group of people that thought Belarus was doing a good job during the COVID days. Belarus. This is one of the most totalitarian states in the world. But during COVID, you had your freedom. This is me not being a purist. But was it the podcast? Yes or no? Was it the podcast? Okay, I'll check it. There you go, people. Michael Saylor and Seyfedina Moose, tense moment on Bitcoin yield. Yes, great question. I've been talking about this a lot. I always try to talk about it. Um, that's just how that world works in finance. Exponential. Straight line on log scale. You put it on log scale, take it off log scale, it can, you know, look like it's moving fast depending on how fast. But it doesn't matter what log, base 1, base 2, base 8, base 100, it will always turn into a straight line on some curve. Here's the gold price. Here's the gold out of the ground. It's just absolutely always exponential. Stocks do it, bonds, everything. But Bitcoin does not, which is really curious. And we were talking about Saylor's old model, which again I always thought was funny because all your models will be destroyed. Then he makes a model. He does this sort of like stair step down exponential. And when I say exponential, it's just if it's a straight line, if the interest rate or the growth rate is a straight line, then it's exponential. And so he does this declining exponential. And then they decide to just take it straight out from here. So they turned it into a pure exponential somewhere around 2035. And by the way, this could happen. I mean, it's so bizarre to do it like this way. Obviously, our power curve is much more beautiful. But again, if the state takes control of a lot of Bitcoin endpoints, if you have to, like we talked about yesterday, the Patriot Act, if you have to use a whitelisted Bitcoin address, if you can't withdraw, if the only thing you can do is pledge your Bitcoin against fiat debt, if that's basically the only thing you can do, you try to earn Bitcoin, you buy Bitcoin, and then you pledge it against debt, Bitcoin's going exponential. It's going exponential. It will only move like this, and then it will just move along with the debt markets. And that would suck, actually. It might be good for us who've been in it a long time because exponential grows faster than power. But if the system pulls Bitcoin exponential, then we're in the same system that we've always been. But the interesting thing, and someone mentioned this already before, if Bitcoin pulls the system into power, and MicroStrategy might be forming a power curve right now with the stock price, which makes sense because Bitcoin's power, then that suggests Bitcoin's stronger. Like Bitcoin is the winner there, not the system. But you can't do infinite amounts of interest on a power curve. You have to do less and less and less. And thus the idea, which I actually do agree with Seyfedin, that could happen. It's like not a lot of debt contracts, maybe short term. You could do simple interest, but you cannot do this in a power curve. Basically, you're just taking too many sats per your original loan that is denominated in Satoshis. So there's a lot of pieces to the puzzle there, right? Are you going to denominate your loan in fiat or in Bitcoin? If it's in fiat, then it's okay for now because fiat always goes down against Bitcoin. That's fine. But if it's in Bitcoin, it's just hard to see how that would work. Good morning, NYC Huddle. Geo says we're on fiat forever. I don't know, to be honest. I could see both scenarios playing out. Both are fine for Bitcoiners, but I think a Bitcoin standard is better. I am a purist at the end of the day there. Yeah. I think we were joking about it because Saylor was calling him a communist. Thank you. Episode 239, Michael Saylor's 4 Years of Bitcoin. 2 hours on YouTube. You can get me some coffee next, Gio. I appreciate it. There we go. Thank you, Casa. I like that. What you're saying here, though, 21 million, it's totally. I'm not going to take a position yet. I would hope Bitcoin stays like this. We say sort of in this gradual, sustainable, peaceful sort of growth. It's also possible that, like Saylor said, like you said, if you're, if Bitcoin and fiat try to coexist, you still have a money supply that grows like this exponentially, just along with debt. They just keep growing and growing and growing. Then that means they control the market and they're going to stay on exponential growth. So either one could happen. But this is the key, actually. And this literally could happen around this time, right? Bitcoin, like think about 10 more years of Bitcoin, just 10 more years of dominance and financial advisors getting crushed and still thinking Bitcoin's like Beanie Babies or whatever. They did confiscate gold. They confiscated gold. They controlled gold. If they can control Bitcoin and still keep their fiat debt game going, then Bitcoin could go exponential, meaning the growth rate stays constant. It could go up and down a little bit, but it's constant. That's why I tried to show you this chart of gold coming out of the ground. It's like it's constant. This looks windy, but it's really not. 1.7%, 1.8, 1.7, 1.8. It's extremely, the trend line is extremely robust at 1.7% per year across the interest rate is a straight line here, and then the growth rate you can see is a straight line here. So, yeah, I appreciate you guys tuning in and listening to a lot of the droning about exponential versus power, but that's how I'm looking at it, the whole thing. And this is a good way to look at it. Hope-filled philosophy. I think we just got to get rich. Naval said that too. People got to get rich. Got to stop killing each other over stupid things. Bitcoin will help that. In the short term, definitely not. In the long term, though, maybe not this generation of politicians, but the one after, like, now like all kids would have grown up with Bitcoin. You see the value. Maybe. Yeah. That's pretty funny. Anything else, guys? 2 good follows if you don't. Money or Debt, Steven, and Cena, 21st Capital. 2 very good follows. Yeah, I like this. So the person says wild guesses, and he says all possible outcomes covered. Can never be wrong. But they are indeed, and I think, did you say at Casa that um, the base case is very close to the power, at least when he started the model, which was here at 50%, so a little bit over the power. But it's not explaining what the power curve is explaining. The power curve is scale invariant. So any point on the scale, you can have the same proportion. So it explains a lot about growth, network growth, the size. This doesn't explain anything other than being wild numbers that a business consultant came up with, Michael Saylor, to do a stair step, different thing of growth, and then turn it into an exponential curve as we get down to maybe stock market growth at that time. Yeah, I will. I will. My point is just that I know people are thinking about it a lot, but I think they're either thinking about it in terms of fiat, or if they're even close to thinking about it in Bitcoin, they're not thinking about all the repercussions there of if Bitcoin is a power asset versus an exponential asset, i.e., a sustainable asset versus an exponential asset, which is often unsustainable. But I will. Thank you for that. All right, guys. I'm gonna cut it for the day. A lot of good stuff coming though. I'm gonna expand it. We'll get more derivatives, the whole market, treasury companies. I'll get it all soon on easy to read charts, and so we can see the time series of how this stuff changes. Because I'm very curious, as I'm sure you are as well, to see how these things play out, especially during the bear. Not so much the bull, but the bear for sure. Which, in my opinion, is gonna. It's just got to come following the bull. So with that, I bid you guys farewell. Have a great day. Thanks for the entertainment. Thanks for the comments. Thanks for watching in the hot tub. Appreciate it, Rich. Thank you, Daniel. Peter Schiff is on the case. Thank you, Casa. All right, guys. Chat tomorrow. Try to be earlier. And until then, take care.